The stock market is moving constantly, which means that you need to adjust your portfolio accordingly every now and then so that you are in the right position. But this can be a little difficult because you don't always know exactly where to go. Here's the thing. I'm going to give you a very simple strategy and walk you through the process that I use to decide what I was going to invest in 2026. And it's really quite simple. Keep the winners, sell the losers, and find opportunities for covered calls. I'm going to talk about what that is and why that's the case. Why is this important? Because it gives me clarity and it is simple. What is simple is repeatable, and what is repeatable is the thing that can give you success year over year. Now, what did I sell? What did I buy? And why is that the case? Here are those stocks. And these were across different accounts. So, I've got accounts at M1, I've got accounts at Fidelity, all over the place. And that's because I test these things out for you. Okay? That's why. So my stuff is unorganized, so I can help you to be organized. All right? So let's first start off with some of the things that I sold. I'm going to skip all over the place because the accounts are all over the place. Some are small dollars, some are not. But the first one, I talked about this one, I had to sell Netflix. I had to sell Netflix. Netflix disappointed me. At one point, I'm sure I was over 20%. Now, I had Netflix. The babies had Netflix. We all sold Netflix. Oddly enough, my daughter, she was up like 30-something% on Netflix. My son was down 20% on Netflix. And I was up 4.56 on Netflix. I don't exactly know how that happened. I assume it's because we invested in Netflix at different times. I need to go back and really check those dates as to how that happened. But Netflix had to go. Now, for me, the reason why I sold Netflix is we've talked about this. Again, I practice what I preach. Netflix was slowing down. We know the tariff thing did happen. I have a feeling, but feelings aren't facts, and I don't invest with my feelings. But I have a feeling that Netflix will return and get back to what it was. That don't mean I need to be losing money on the way to doing that. But for now, I switched out Netflix for American Express. So that is where I am going. We can talk more about the stocks that I'm buying in a separate video. But American Express is doing quite well, up 18% in the last 6 months, up 26% over last year. I think we've talked a lot about financial stocks here and there, but I don't think I've owned that many financial stocks myself. Now, I have been on American Express and been a fan of the stock. I've only owned it maybe once every 3 years or so, and it's about time your boy hopped back into it. So American Express is what I switched out Netflix for. Arista Networks. I was up 124% on Arista Networks. It is time to exit the portfolio. Arista Networks has done its job, and it's time to exit with a profit. There is nothing wrong with exiting for a profit. You do not go broke taking a profit. Now, again, I absolutely sell the losers, okay? And those that are about to lose. But if you look at the chart for Arista Networks, I've had it for a while. I've had it for probably multiple years. I've definitely had it for over a year. But it's starting to flatten out. And for me, it's done its job. I'm not going to be greedy. I've made my fair share here, and it's time to move on to what I hope to be greener pastures. Now, I am substituting this one for KLA Corporation. I like to call it KLAC because that is the stock symbol, KLAC. That stock is up 47% in the last 6 months at the time of recording, and 97%, I had to double check, 95% in the last year. So you can see that I am hopefully moving on to greener pastures. Now, remember, the Arista Networks was just from the time I owned it. Okay, 124% since I owned it. KLAC, okay, KLA Corporation, that was just 95% in the last year alone. Okay, so we'll see if that's going to hold in 2026. We don't know. And obviously, we're going to check back in June to make those adjustments. Next here is IBM. I made 6% on IBM. It's okay. And if you take out everything else, right, the average for the stock market after inflation is 7. But the stock market in 2025 was up double digits. If I remember correctly, and I could be wrong here, I'm pretty sure it was around 17%. I will put a correction on the screen if I'm incorrect. I think it was around 17-ish%. So it well underperformed. Again, you don't go broke for taking by taking a profit, so I'll take the 6%, but I could have done much better. Now, I only invested in IBM from the midpoint of the year, so June through the end of the year. It was in one of my retirement accounts, so like one of the Roths, a Roth or traditional, I think it was in the Roth. So no tax implication here, but it far underperformed. What I am switching it for is for Monster Energy. And that's what we have not yet talked about on the channel. And I'm pulling up the performance here. And the stock is up 20% in the last 6 months, up 45% over the last year. We can go in deeper detail on that one in a separate video if you guys want me to. Now, because I made a lot of sales, I had a lot of cash in one of these accounts, and I moved that to an index fund. I still believe in index funds for those who don't believe me. That is the S&P, the iShares S&P Total Stock Market Index Fund, and that's where I just pumped a ton of money. Now, that is a place where I'm going to do cover calls. For those who don't know, the way that you do cover calls is you have to have a minimum of 100 shares. I have well over 100 shares at this point. I've had that for quite a while, so I'm going to do that and then sell options on top of that to get an additional share of income or additional stream of income. If you want to know exactly how that works, I've done an entire video here. Now, another stock that I got rid of, had to go, but I did make money on, was Palo Alto Networks. Palo Alto Networks was up 45% for me. So I made 45% on it. I profited. It did its job. I did not replace that one. So that was one of the ones I just raised cash from and just held on to it, to the cash. And we'll see what we are going to do with that. If you are someone, though, that feels like they've made all the right moves, they're doing all the right things, you've got a solid job, you've got good consistent income, but you feel like you're not moving and progressing in the way that you should financially, then me and you need to talk. You want to go to buildingbread.com/callkev, and I can help you create a financial plan that gives you momentum and helps you to move forward. Again, buildingbread.com/callkev, and we can get back to our regularly scheduled programming. All right, I got rid of NRG. I got rid of NRG. The reason why I'm hesitating now, okay, I'm not sure, and we've done a video, you can check out that video here on oil stocks. So I'm conflicted. You guys know I held NRG for almost 2 years now. It was doing quite well. The reason why I got out of it is it was starting to slow down just a bit, and I could move the money to the index funds and continue doing cover calls. I was already up, I think, well over 90%. So I got my profit. I can still do cover calls. I can move to something that was a little less risk. And this was before the Venezuela thing. The only reason I'm slightly conflicted, and I say slightly, is because I don't have the personal conflict of what's going on there because I had it 2 years prior. So me holding on to it, I can't predict the future. So there's that. But now it's like, well, what if it went from 90% to, I don't know, 200% or something? So there's that. But I'm not going to let that bother me. I made money when I made money. And again, I sold on December 31st because things were starting to flatline. I just wanted to move elsewhere. One stock that I did buy of this section of stocks here is TJ Maxx. TJ Maxx is up 22% in the last 6 months and up 27% over the last year. Let me double check that. Yeah, 22% in the last 6 months, up 27% over the last year as of the time of doing this recording. I think we pretty much know exactly why that was the case. People were moving towards discount shopping, looking for better prices due to how the economy was shaking out. That may continue at least for the first quarter of this year, but I'm hoping it's going to be at least the first half of this year in 2026. I also got rid of eBay. eBay did do well. I made a profit on eBay. However, looks like eBay is starting to slow down. For what reason, I don't know. It's not going to matter to me. I made my profit. I'm getting up off of eBay and letting that one go. eBay was up 19% in the last 6 months, up 44% in the last year. And hey, I ain't mad at it. I'm not mad at it at all. But again, if I start to see things kind of flatlining for any reason and I've already made my profit, it's okay. It's okay for me to go and take my money and go on somewhere else. And that's exactly what I did with eBay. Is there a case for it to continue to do well in 2026? That's totally fair. If somebody came up to me and said, hey, you should continue holding eBay or continue buying eBay, I don't think I would disagree. But for me, based on how I'm looking at the market, I just went ahead and chose a different company. I did go ahead and take my own advice, right? We talked about this in several videos. I went ahead and bought Invesco. That is IVZ. That stock is up 69% in the last 6 months and up 62% over last year. Another finance company, so perhaps I'm stepping a little bit heavy into finance, and we'll take that risk here and we'll see where that is going to go. But again, I practice what I preach. One we had talked about, one that I'm investing just a bit more in. And the last one here is one that I sold. I sold Walmart. Walmart is one that has done its service. Last year, or really year before last, so 2024, if I'm remembering correctly, that was the year that Walmart had did its stock split. We talked a ton about Walmart that year, and that kind of carried into 2025. Now, I haven't invested in Walmart for that long, but I talked about it a ton when it did that stock split. It did well that year, if I remember correctly, and it held on in 2025, and I bought it and held on to Walmart due to the tariffs, due to their ability to kind of fight off the tariffs and be somewhat inflation resistant. And I just didn't get the performance that I would have wanted out of Walmart. To give you some context here, Walmart was up 14% in the last 6 months and up 24% over last year. And that's not bad. That is not bad at all. Now giving you the numbers, I'm like, yeah, maybe I could have kept it. But switching to, saying that from Invesco, you're like, do you want the 24% or the 60 some odd percent? Kind of leaning towards the 60, right? There's a clear difference between the TJ Maxx's of the world, the Walmarts of the world, and something like Invesco, something like KLA, right? There's something happening in finance, something happening more in tech. So KLA is tech, and obviously Invesco is finance. So those are the things that I'm kind of looking at versus a Walmart. But again, there's nothing wrong with Walmart. Just trying to switch things up just a bit, and we'll see how they do in 2026. But we'll love your thoughts. What are you switching up in 2026 in terms of your portfolio? Are you holding steady? And one other thing, I am buying gold. I'm just a little bit though. I'm just doing like 2% of my portfolio. Not a ton. But gold is at an all-time high. At the time I'm recording this, it did incredibly well in 2025, and now knowing that we have some unfortunate more chaos, which I do not like, especially international chaos, it unfortunately might be among the top investments for 2026. That's rare to see gold at the top consistent years in a row, so it's the only why I'm doing 2%, because I don't like, it's hard for me to trust gold, but we'll see. We'll definitely come back and reevaluate in June, because for those that don't know, I like to evaluate my investments twice per year. That gives enough time for those investments to breathe, to learn from the year, and to come back and see whether we were right or not about some of these. So that's what I got. We'd love to hear your thoughts and what you have for the year. If you want to learn more about the stock market, investing, and everything in between, you want to check out these videos right here.